Good morning, everyone. Legos. Is that the future? Is Legos in everything electronic? Are we talking about the old Legos from when I was a kid, those little blocks? How are they doing? Why is that news today? We're going to talk about that and performance across different asset classes. And then are some people becoming bears? Corey's going to dive into that. As we get started, this is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So Corey, I saw this, and I know you have young kids. I see Lego hits record revenue in the first half of 2025, boosted by brick, flowers, and cars. Wow. The Legos of today. Corey, do your kids play with Legos?
Oh, you know it.
You know it. So,
Yes, sir.
so like when I was a kid, there was just basic Legos. There was like rectangles and squares, and then thinner rectangles, and that was all there was. And I don't have any of those original Lego sets. Maybe I should have kept them. They're probably collectors now. But we also had things like teeter totters, and there was something else that was like metal beams too. I can't remember what that was. Lincoln logs.
Oh, we got those. Yeah.
Yeah. So we had all these things, and most of them are gone. In fact, today's world is more electronic. I mean, I see kids on cell phones and doing Roblox, things like that. But Lego. So when I see this kind of news, I'm like, wow, are we getting a throwback to the old days? And diving into this, Lego blows it out with a 12% jump in revenue, $5.4 billion in the first half of 2025. And I thought this was interesting. They added 314 new sets and, opening new stores. And I mean, to me, this is a sign of bullishness that they're doing so well because this is a discretionary purchase. And I've seen the cost in some of these Lego sets, and they can be hundreds of dollars. So this is for a toy, right? So, and I get it. It's a creative toy. People work on their spatial skills. But like to me, this seems like good news to see this out there because I would never expect it to be this good. What do you think?
Mike, I met a guy a couple weeks ago opening up a Lego franchise store. Have you heard of that?
No, I have not.
Yeah, apparently margins are pretty thin. I mean, good for Lego. Margins are thin, but the stores tend to do really well. And of course, like with any franchise, you get your allotted space. No one's going to open another store within a certain space from you. But I thought that was very interesting.
Yeah, I mean, I just see it as a positive. And hey, I'm all about people not being on their cell phones all the time. Now, I will say, and Corey, I'm sure your parenting style is probably better than mine. I hope it is. But when I was a parent of little kids with Legos, and my parents would buy them a Lego set, and they would enjoy playing with them, and I would anything with lots of little pieces, Legos, puzzles, things like that. I would always tell my kids, I'm only going to pick this up once. I am only going to pick this up once because Legos and puzzles, I mean, they would be all over the house. I mean, these pieces, and I'd be like, I'm not going to spend all my time picking this stuff up for you guys to get out. How about you, Corey? Do your kids like they play and put them away or build something?
I have definitely picked up puzzles more than once. Legos, though, Legos, the kids do okay. I've helped, but I've also stepped. Oh, man, you don't want to step on one of those.
Well, maybe someday we'll switch this to a parenting podcast, our video, and we'll give our parenting wisdom. But
Yeah.
we'll keep it on the financial side. Corey's going to take us through some different asset classes and their returns, and I know we're invested in some of these.
Yeah, and I saw this a couple weeks ago too. Have you seen some of these sets coming out? The Nike Lego combo. So they've got the Nike Lego sets, which are kind of cool. But then I was actually looking, I might get the kids a basketball. A
Wow.
Lego basketball.
Does it bounce or is it made of bricks?
Yeah, no, it's a basketball. It just has that different pattern on it.
Ah.
They have some
So
shoes too.
so my
Not
question,
these.
here's a question, Corey. So keep right there on that screen. So you see the Nike Lego. Does Nike pay Lego to make this, or does Lego pay Nike to take their like? Who
Yeah,
pays who on the brand?
that's a really good question. I was talking to that franchise guy about that, and he wasn't sure, but we were kind of talking about it, and it seems like the Lego brand is so iconic. It seems like most companies, whether it be Disney, Nike, whoever, I would guess they'd be more likely to be paying Nike. I'm sorry, Nike or Disney would be more likely to pay Lego than Lego would be to pay them. What do you think?
I have no clue. I mean, it's like, or maybe it's just a joint marketing
It
effort,
might
and
just
it's,
be a mutually beneficial thing, yeah.
like, I mean, because guess what?
The
If a
Star
kid
Wars stuff.
if a kid is playing with that Nike shoe and then they go to the store, what kind of shoe they gonna want to buy? They're not buying New Balance like me.
Oh,
They're buying Nike like Corey.
yeah, it's interesting. It's very interesting. But it certainly is a mutually beneficial thing, no matter who's paying who. All right, jumping to some year-to-date performance on different assets. Mike, if you were all in on platinum, you'd be having a really good year. If you were all in on orange juice, you'd be really having a bad
Hey,
year.
Corey, I'm all in on steak, so that's number 2 and 3.
Oh,
No,
yeah.
actually, it's
Okay.
number 3. Two is, or I don't know. I don't
Okay.
even know.
But you do have Bitcoin up there having a
Uh-huh.
good year. The S&P 500's down here, around 7. Again, this is as of a couple of days ago.
Hmm.
You see some other countries. The German indices or German index is doing really well. So that's up 19.
Hmm.
Yeah. Anything else interesting? The VIX, so volatility is way down.
Well, that's good. It
Lumber's
wasn't
been
down in April.
crashing.
In
What?
April, it was up. I said in
Yeah, it
April it
was
was
up.
up. So
We got
orange juice. So a good thing I don't invest in futures, and that's good for all the coffee drinkers that cocoa's down. So
Absolutely. So I just wanted to hit on that. Yeah, if anybody sees anything interesting there, let us know.
all right.
All right, and jumping over, Nick Majuli. Remember, he wrote the book Just Keep Buying. I think that's the title of his book. Just Keep Buying. So what is he doing all the time? Well, he's buying stocks. And he mentions in this article that just because he is feeling bearish, he's not, for the first time, or for
Mhm.
the second time since he started his blog, he's not really changing anything that he's doing. Okay, so he's not recommending everyone sell all their stocks. He's just saying, hey, I'm going to allocate a little bit less and start stacking up a little cash because I'm feeling bearish. But again, he's not selling any of his stocks. What does he note? He notes that Chamath, the SPAC king, a self-proclaimed SPAC king, is coming back with a new SPAC. He doesn't love to see that. And they mention in the prospectus that there is no crying at the casino. So if you invest in Chamath's SPAC and you lose all your money, then you got to just be happy with that. You definitely cannot cry about that. So that's Nick Majuli says he's not a fan of this kind of investing, which is
Mhm.
maybe not investing. Maybe it's speculation. But he goes on to highlight some valuation metrics. So he has the S&P 500 price to sales over time. He notes that the peak was in December of 1999. That's the highest on record, going back to the 40s. And we're right there at 3.2, I believe, is what he mentioned. 3.2. And he highlights how the total market capitalization of U.S. stocks with a price to sales ratio greater than 20 is at an all-time high, or it's right there close to an all-time high going back to the 2021, early 2022 high. So he highlights these things. Mike, I'm kind of curious. do you have any valuation concerns? He's highlighting valuation concerns or speculation
Mhm.
activity. Do you have any concerns about these things?
Well, I mean, certainly there's companies that go up too high, too fast, too far. All right. I mean, people would get too excited about them, and they buy ahead. You know, like you would have said, you know, a year ago, like Nvidia. Like, wow, how high can this go? And I throw that out there because Nvidia earnings are later today after the bell, and I'm sure we'll be talking about that tomorrow. But it's sometimes it's like, you know, you buy and it just keeps on going up, but it can't go up forever. And so when that PE ratio gets too out of whack, it makes me nervous, right? And there's times to sell or at least take some profits and shift to other resources that aren't as highly valued. Um, you know, I'm not concerned at the moment. Where I would get concerned is when everybody thinks things are going to keep on going up. Like when everybody, 100%, everyone's like, "Oh, I'm all bull." That's when you get the big crashes. Is when I'm glad to have bears out there. I'm glad to have people questioning things and looking at that. So, anyways,
It's definitely not a secret that things, are historically looking a little rich. So yeah, it's not like flying under the radar or anything like that.
yeah, and you throw in there's an inflation of dollars too, right? You know, $100. You know, I mean, let's just be honest. $100 5 years ago was worth more than $100 today. So if you say, well, that stock's $100, really $100 of 5 years ago, that stock should be 120 or 115. I'm not exactly sure the number, but it should go up. So, anyways.
All fair.
Hey, Corey, I was just thinking when you were showing that from Nick and that, I was wondering, does Nick do a show where he references what you and I think? You know,
Uh, I'm sure he does. I would be surprised if he doesn't.
since we're doing a show where we reference what he thinks,
Yeah,
you know,
yeah.
I'll have to friend Nick on LinkedIn and be like, hey, just so you know, Corey and I'll be glad to share our opinions anytime you want them.
And let me just reiterate. What is he? He's not selling anything. He's just letting some cash pile up,
Hmm.
for the time being, and letting everything else continue on.
Hopefully, he's shifting his investments because just going to cash is definitely not a good thing.
No,
I
no,
mean,
he
yeah,
he's
yeah.
he's not selling anything. He's not selling anything.
All right. All right. Well, today, I mean, the market's been kind of muted today. I think everybody that's like Corey and I are waiting on pins and needles to see what NVIDIA and Jensen Huang reports after the bell. You know, I'm still waiting for Jensen to accept my LinkedIn friend request. Still outstanding. But we are hoping NVIDIA, exceeds earnings. We are investors. It's in our models. I've seen the current volatility on it. I think is around 6.7%. I can't remember, but it's somewhere there. And what that means is if they come out with good news, it could go up a quick 6-7%. If they come out with bad news or a forecast that says sales will go down, it could drop by 6 or 7%. That's the current volatility expected with NVIDIA after the bell. And when you're talking about a company that's worth I think it's over $4 trillion, 6% is, $250 billion. That a company could jump. That's a lot of money, 250 billion one way or the other. So that's, I'm sure, going to be one of our main topics tomorrow. So with that, rest easy, and we'll see what the rest of the day provides. Have a good one. Bye.